You have a perfect payment history. You have an 800 FICO score, you make 6 figures, and yet, American Express just denied your application. Or worse, they put you in pop-up jail, denying you the sign-up bonus. Why? Because to Chase or Citi, you are just a credit score number. But to American Express, you are a data set. They don't just look at if you pay. They look at what you buy, where you fly, and exactly how profitable you will be for the next 10 years. Today, we are cracking open the Amex black box and exposing the algorithm that decides who gets the black card treatment and who gets blacklisted. Disclaimer. To understand the algorithm, you have to understand the architecture. Visa and MasterCard are just networks. They connect you to a bank. They see where you spent money, but not always what you bought. Amex is different. They are a closed-loop network. They are the issuer, the acquirer, and the network. This means they possess Level 3 data. When you swipe a Visa at an airline, the bank sees Delta Airlines, $500. When you swipe an Amex, their algorithm sees Delta Airlines, first class, JFK to London, seat 4A. They aren't looking for people who spend money. They are looking for lifestyle patterns. The algorithm is asking, does this person spend like a millionaire, even if they aren't one yet? This is where most people fail. Amex hates gamers. A gamer is someone who opens a card, hits the minimum spend requirement to get the 100,000 point bonus, and then stops using the card. In the industry, this is called churning. Amex's AI has developed a specific filter for this. If your spending drops immediately after you get a bonus, the algorithm tags you as low value. Result? You enter pop-up jail. You can apply for new cards, but a pop-up will appear saying, "You are approved, but you are ineligible for the welcome bonus." It is their way of saying, "We know what you're doing." So how do you trigger the high-value flag? The algorithm obsesses over one metric, share of wallet. Amex doesn't care if you spend $1,000 or $10,000. They care if that spending is 100% of your disposable income. If the algorithm sees you using your Amex for coffee, small spend, and for flight tickets, big spend, it learns that you are using the card for everything. But if you only use Amex for flights to get 5x points and use your Chase Sapphire for dining... the algorithm downgrades you. They want monogamy, not an open relationship. Here is the final secret. Amex assigns you an internal score that has nothing to do with FICO. It's based on velocity, how fast you pay. If you carry a balance and pay interest, Citi loves you. Amex tolerates you. But Amex loves the user who spends $50,000 a month and pays it off in full 2 days before the deadline. Why? Because Amex makes its real money on merchant fees, not just interest. High velocity spending equals high fees. Listen closely. If you want the Centurion invite or just the best approval odds, stop acting like a borrower. Start acting like a partner. Give them the Level 3 data. Give them the share of wallet. And never, ever try to game the house. Because at American Express, the house always knows. Subscribe for more financial leaks.